All right, we're going to start off with chapter 6. First things first, can anyone tell me what an I can't speak today, I apologize. Can anyone tell me what an internal control system is and who's it usually used by? What do you typically think of when you think about internal controls? Like what's happening?
Protect our assets.
Protect our assets. So we want to typically, with these internal controls, people want to make sure that there's no fraud happening, that everything's able to be reliably looked at. Because imagine if we didn't have internal controls and you had a financial statement that was done by someone who did not know what they were doing. You typically would have a whole bunch of errors. Having internal controls can include like background checks or specific standards set by the company, policies, or even simple things like having a system that people input accounting records into. The best thing to do is, with the first part of chapter 6, is know a lot of the terminology. You might be questioning on the general aspects of it. One thing is that internal control systems provide a very limited set of assurance. It doesn't completely assure that everything's perfect, because can you completely protect anything? Nope. You will never be able to have basically a fail-safe internal control system, because everything is exposed to things like human error. Anyone can actually mess something up. Oops. My back is just messing with this thing. So the 4 things that internal control systems do is protect assets, ensure reliable accounting records, promote efficiency, and encourage employees to follow company policies. Now, who usually sets these internal controls? Managers. Now, we're going to swing that into the Sarbanes-Oxley Act. Who does the Sarbanes-Oxley Act apply to? Everyone? Not everyone. There's a specific subset of people that the Sarbanes-Oxley Act actually applies to. Can you just give me a wild guess?
Businesses.
What type of businesses? Public businesses. So any public business is what the Sarbanes-Oxley Act applies to. They're required to have a set of internal controls. The other things that are kind of tied into it is that management must assess and report on the effectiveness of the company's internal controls. So internal audits, being able to make sure that everything is running smoothly, being sure to make sure that whatever internal controls are set there actually work. External auditors must evaluate internal controls. All public companies have to be audited around once a year at the least. So they're always going to be basically checked, and violators receive harsh penalties. You guys don't need to know the components of internal controls, but it spells out crime and its control activities, risk assessment, information and communication, monitoring of controls, and environment. Now, there are limitations of internal controls. There's 3 of them. Can anyone tell me any of them? So, what do you think causes internal controls to fail? People. Now, on purpose or by accident?
Either or.
Perfect. Human error or fraud, because you can't protect internal controls completely. You might accidentally type the wrong number in. You might type the wrong person in, or someone might be going behind your back and pocketing the cash from the register while the other person is making the records to hide it. So there's one more. The last one, can anyone give me a wild guess? It's all good. It's called cost benefit constraint, or the business decision. Basically, the business can't afford it, or they don't believe they need it. So basically, the business is limiting itself. So the 3 of those for limitations of internal control is human error, fraud, and cost benefit / business decision. Either one should work. Now, the big important thing too is the fraud triangle. Can anyone tell me any of the sides of the fraud triangle?
Pressure.
Pressure is one of them.
Is opportunity one?
Opportunity is one of them.
Rationalization.
Rationalization. So pressure is basically, I needed the money, I have a rent due, and I could probably take it from my business. And that's where opportunity comes in. I saw the cash right there. No one was watching it. And the last bit is rationalization. I deserve this. The company doesn't pay me enough. I am a hardworking company. And I'm a hardworking person. This company owes me way more than they ever give me. Rationalization. Any questions so far? Because we're about to swap from internal controls into cash liquidity. All right. So liquid cash, does anyone know what that means? Or liquid assets?
Cash. Basically, liquid assets are like assets that you can turn into straight up cash like immediately.
Perfect. Now can someone give me an example of liquid cash? What is happening here? I'm gonna start putting these examples up on the board. So what comes to mind when you guys think of a liquid asset? It could be anything.
Would stocks count?
Stocks would not count because you're not really able to turn them into cash right away. People can give you money for a stock, but what is the liquid asset that you get for the stock? Cash. Would cash in a bank account apply? All right. What about cash in my boss's safe? We got it. Yeah. It's right there. That's still cash. So the business is cash. What about the coins in a cash register? Yep. Very annoying to count, but that's still cash. What about equipment? I'm going to sell this equipment. Does that mean it's going to be a liquid asset?
Yes.
No, because the reason why is is it assured that I'm going to sell this within the next? Yep. That thing could be sitting in the back for who knows how long. I've been trying to get rid of that thing forever. Trust me, y'all. No. What about inventory? Is inventory liquid? So this is a trick question. As much as we want to sell it as soon as possible, it's still a current asset that could be, we want to sell at least within the year, but we can't promise it'll be sold within the month. The biggest reason why, have you ever been to Walmart and saw the most dustiest shelf ever? You see like maybe that grill that's been sitting there for a while that they've been hoping to sell in the winter. Discounted it so cheap, they're still wondering why it's not gone. Now, what about a account receivable I'm going to be able to hopefully receive within a week? Is that liquid?
Yeah.
It would be. It's not a liability. It's a liability to them because they owe it to me. So, and the reason why it is liquid is because of the terms that it applies to. Technically, I should be getting that cash within a week. Liquidity of assets, you want it under 30 days. So account receivable that we hope to receive within a week applies. Due to the fact, if they don't give it to me then we're gonna have issues. And that could be whether we renegotiate these terms and they're gonna have to owe me interest, or they made bankrupt. Until then, we consider it liquid because we should be getting that cash soon. Any questions on liquidity of cash? No? All right, then we're gonna start working on bank reconciliations. Let's get the bare bones of bank reconciliation up first before we start working on the problem. So what are the two components? What are the two entities that we look towards for a bank reconciliation?
The two what? Sorry?
The two entities that we look to towards bank reconciliation. Who do we have to look towards?
Bank in the books.
Bank in the book. Now, do they both have a starting value? Yep.
Yes.
We have this beginning value that we want to basically work towards. Now, the big reason why we do bank reconciliation is because they do not equal, and we need to fix that. So we rather add or subtract certain items. So we're gonna pick green for the bank. That's good enough. Well, let me get a little smaller. So what, and you, we don't have to put it in order of like, we're looking at add first and less next. What kind of things do we look towards the bank?
Deposits in transit.
Deposits and transits, adding or subtracting?
Adding.
There's two more.
Outstanding checks.
Outstanding checks. One more.
Bank error.
Bank error. Now, do we add or subtract those, or do we do both?
Both.
Both. All right. Now, this is everything for the bank. We're gonna move on towards the book, as long as my jacket doesn't make everything disappear. All right, we'll give blue for the book. Perfect. All right, what's some book errors?
Bank collection.
Bank collection, perfect. Is that adding or subtracting?
Adding.
Awesome. All right, what else?
NSR, whatever that stands for.
NSF. You're
NSF,
so close. Non-sufficient funds. Now, do we add those in or do we subtract those out?
Subtract.
Less. Just to kind of go over, this is non-sufficient funds. And technically, that is basically the customer tried to pay us, but the check bounced when it got to the bank. So the bank said, nope, you're not getting money today. So we have to fix that up. All right, what else?
Now there's an EFT.
EFT, do you know what that stands for?
I don't remember.
Electronic funds transfer. So that's essentially when money is transferred electronically. So we don't have like a paper invoice put down in front of us. That's why we don't know about it. So we check our bank statement. So do we add those or subtract those, or is it both? It's both. Perfect. Now, we got three more. Electronic funds transfer. I'm actually gonna. All right.
Would book error be on this one too?
Book error. Add, subtract, or both? Perfect. All right. Now we have two more.
Interest revenue.
Interest revenue. Add or subtract?
Add.
We got one more. Anyone have a wild guess what the last one is?
It's service something.
Service. You're right. It is service something.
Service expense.
Basically, service charge. And is that adding or subtracting?
Subtracting.
Basically, service charge is where the bank takes money out of your account saying, hey, you have an account with us. You need some money. So your lovely maintenance fees, your balance, your overcharge balance, all that fun stuff. So let's start bringing up a question. I'm going to put this up on the board. I'm going to have you guys work it out on your own. I'm going to give you guys around, we'll give it like 10 minutes. And then we'll go from there. And I know some classes, they require the journal entries, so we'll also work on the journal entries for these as well. I'm gonna move this up. Putting the company name up here for reasons you'll figure out through this process. All right, any questions, let me know. Otherwise, some tips for y'all. One thing to do is always memorize the bank issues first, because the bank issues are easy. You only have 3. Another way to do this, ask yourself, who knows? Whenever you're looking through this, does the book know? Because if not, we need to let the bank know. If the bank knows, we need to let the book know. And if neither knows, that means it's a bank issue. And we need to get them to fix it. What's the number 1 rule after you finish up everything that has to happen to know that you did it right?
You have to be equal.
They have to be equal. That's why I love bank reconciliations, because you always know if you got it on the test.
So if the bank knows about it, we have to let like the book know.
Yeah, but here you might wanna there we go.
That means you have to write that with the book then?
Yes.
Okay.
So if the bank knows, you put it on the book. If the book knows, you put it on the bank. If no one knows, that means it's a bank issue.
Well, how do we know if no one knows?
Basically question it. Who knows it's an issue? We won't know it's an issue till we figure it out. And we say, hey, wait, look, there's an issue here.
Like on number 4, like.
Yep, exactly.
Okay. I should figure it out.
I'm gonna start going through this. Does it all equal out now that we have the right? Yep, okay, good. I am really sorry about that, y'all. And for the people that joined on Zoom, just make sure that, let me know if you guys can't hear me or if we need to fix anything. But besides that, I think we're good. You guys can talk through the Zoom, yell across the hall, or message in the chat. So we're gonna start going through this. Keep going.
Sounds good.
Sounds good, thank you. See, that's how we know it works. All right. We're just gonna start going through this. So what is the beginning bank balance? 4,610. So we're not gonna, actually, we're gonna do this one by one. So what is the balance for books?
4610.
4610? Oh, wait,
Oh, the books?
Yeah.
Oh, my bad. 3900.
3,900. So deposits in transit, who's responsible?
The bank.
The bank. Do we add or subtract?
Add.
All right, 1 second. Bring these guys in. Perfect. All right, we're adding 445. All right, so we're gonna check mark these as we go. Check written by the Jelly Bear Company, detailed
Is there any
to
way I
amount
can-
of Jelly Belly Co. $20.
Sorry.
Wrong account. So whose error is that?
Vic.
The bank. Do we add or subtract that in?
Add.
Yep. The trick with the bank errors is that you have to figure out what they mean by debited, because does debit mean the same for us as it does for the bank?
No.
Basically, they're looking at a debit and credit through their eyes. So that means they decide, hey, I'm going to, if they're debiting, they're taking money out of our account and putting it in theirs. So, note collected by bank
Books.
goes to the book. Add or subtract? $1,000. All right. Bank service charge. Banker book. Add or subtract?
Subtract.
Non-sufficient fund check returned by bank.
Books.
All right, now are we adding that in or subtracting that?
Subtracting.
Perfect. That will be 35. Account discredited cash account for 175 rather than the correct figure of 100. Banker book.
Book.
And are we adding or subtracting?
Adding.
Yep. I'm gonna take a moment. To kind of stick to number 8 real quick, because there's something very important with this and how to figure this out. And I highly recommend when you guys take your test and you see questions like this where it's a book error, don't try to just do it in your head. Use your T charts, T counts, because they're your friend. So we know we're messing with our cash, and we know you put at the very beginning what was entered. 175. And then at the very bottom, you put the correct figure, which is just 100. From that, we know, all right, we credited way too much. And we have to debit back 75. And when we're dealing with a cash account, when we debit cash, that means we add it back in. Now, this is why this works for anything if the figures are swapped. If it was we entered 100 when we meant to put 175, we're able to figure out, well, we just need to credit more. But this is a foolproof way that you're able to get the correct amount on your test. So I highly recommend getting very used to T charts. So we'll put a check mark there. Outstanding checks of 120.
Bank.
Bank. Add or subtract?
Subtract.
So I'm going to start doing the math on this. Let's see here. I want to make sure now that we got people in here, we have the chat up so that we're able to see everyone. Anyone needs a message at any point? Let's see. So we take 4,610. We add in 445, add in that 20, and we minus out 120. We end up getting 4,955. Same thing with the bank. Take that 3,900, add in 1,025, minus out 10, minus out 35, adding back 75. Altogether, 4,955. Does this make sense? Anyone have any questions? No? Awesome.
Wait, sorry.
Yes.
Can you go back over number 8 again?
Yeah, of
Because
course.
you basically just subtract it
We,
from the correct one?
yes, because we want to figure out the difference, because since this is a bigger number, we know we have to subtract to get down here. The
Mhm.
cool thing about T-charts, it's basically an equation. If we put it out on a base level, we know that if we have a number here and a number here, if this number is greater than this number, we have to add to get here. Now, the opposite goes as well. We know if this number is smaller than the beginning number, you have to subtract. And that's where the other side comes into play. Basically, it is itself somewhat of an equation. Does that make sense?
Yes.
Awesome. Yeah, of course. So with that, we can rather, I wanted to work on another one, but for time's sake and to make sure that we could go through chapter 9, we're just going to run through chapter 9 first. Is there a way to remember what goes into what, like what goes into the entity? The best way I always find out remembering what goes to where is always asking who knows. Like if the bank knows, it's a book error. If the book knows, it's a bank error. If that doesn't help, then always try to remember the bank issues, because bank issues there's only 3: deposits in transit, bank errors, and outstanding checks. But if we went through this list by list, deposits in transit, we know that the book deposited money, meaning the bank doesn't know, but we know that we put money in, so it's a bank error, or it's a bank it's a bank correction. Checks written by the Jelly Bear Co. debited to the account of the Jelly Belly Company. Neither side knows. They both kind of only find out when they look into it. So that's a bank error. That's strictly a bank error. Note collected by bank. The bank knows about the bank, the note they collected, but the book doesn't. Do you mind closing the door? Thank you. It suddenly became just very, very loud. Bank service charge. The bank knows they charged us, but we don't know until we look at the bank statement. Non-sufficient funds check returned by bank. The bank knows they returned it. So then that means that we just need to account for it. When our accountants make an error, the bank knows the correct figure, but we need to figure it out so that we're able to fix things. And outstanding checks, we know we paid people. The bank just needs to know we paid people. So we are going to move on to journal entries for this, though, real quick, because some classes require journal entries to be known for the test. Now, there's 2 key factors in bank reconciliation journal entries. One, do we do the journal entries for the bank?
No.
Nope. It'd be like walking into someone else's place of business and saying, well, you're doing this wrong. Let me do it for you. The bank doesn't want that. The bank will figure out its own stuff. But as for the book, what is the constant account you will always use, no matter what? Cash. No matter what, you will always be using cash. So I'm going to, over here, I'm going to put this in red. And I'm going to just mark it by the numbers on here. So we know we start off on 5 for the bank collections. Now, since we're adding to our balance, oh, is it locked? Sorry, so we have full house. If you want, you're free to stick in here if you don't mind being sardine, but we also took over the next room as a Zoom room. If you just want to stick up by Zoom, either one works. All right, no problem. All right, so number 5, where we have bank collections. Now, since we know we're adding to our balance, does that mean we're debiting cash or crediting cash?
Debiting.
Debiting cash. We know that whenever we're adding, always debit cash. Now, if we know this was a note collected, what does it mean that the note's been collected? What account has to be tied to this with the cash?
No, nothing.
Not notes payable. Notes payable would be,
Liability.
yeah, it'd be if we owed someone money. So
So it's a receivable?
receivable, perfect. Note receivable, someone owed us money and they collected. Now we'll move on to 6, bank service charge. First off, we're gonna focus on cash. Do we debit cash or credit cash?
Credit.
We're going to credit our cash. Now, what's gonna be our debit?
Service.
Service. What do we tie on to? Service what?
Expense.
Service expense. It could be anything from service expense to bank expense. It just matters that you guys put an expense at the end of it. The expense is what makes it whole. So we're gonna put service expense. All right, we're gonna go to number 7. So number 7, what's gonna be where's cash gonna be in this? Debit or credit? Credit. So can anyone just off the base know what you're gonna be debiting? Account receivable. Does anyone have any question why?
We won't do it. Yeah, I know. I'm in.
Yep, it returned. Essentially, we got their check and we thought, ah, yes, payday. The people that owed us money has paid it off. And so we wrote it off while we put it to the bank. And then the bank broke the news by saying, nope, you get no money. They have nothing to give you. So we have to reinstate their account and say, they owe us money still. All right, last thing is that book error. So we're just gonna, it doesn't really state it in the question. So we're just gonna say that this was due to a utility bill. So what do you think we're gonna have to do first? Do we debit cash or credit cash?
Credit.
So it wouldn't be credit. The biggest reason. So real quick, we're packed like sardines because we don't have a bigger room. We have a Zoom room next door, or you could stick here with the sardines. Either one works.
Okay.
I just want to let you know. It's up to you. So we're not going to credit cash due to the fact that we're adding that cash back in. Since we're adding cash to the equation, you're going to debit your cash because technically we're not technically getting cash back, but we're fixing up our numbers because we had that cash all along, but we thought we got rid of it. So if this wasn't for a utility bill, what do you think is going to be your credit?
Utilities expense.
Perfect. It doesn't make sense because you're crediting expense, but you're fixing the number again. The biggest reason is we basically overstated how much we paid that utility bill. And that would be all. Any questions on any of the journal entries here?
Any questions?
Chapter 6. We're finished up chapter 6. We're about to go on to chapter 7, 9.
Sorry.
They can hear me?
Yeah.
Okay, sorry.
Yeah, it's for.
Wait, can they? I can.
I'm not. I'm muted.
The
Somebody
biggest
else.
reason why is because this is a different question. For this one, this was for 27 of the book error. Because if you see the true cash balance, it's different than what the true cash balance is for this one. So in this case, you had taken out 27 instead of, you took out 27 instead of adding back 75 because this was off by 27. Yeah, just so it's whatever way the cash flows.
You have a question, you can ask this.
Whatever you have to do to adjust.
I just turned my volume all
If
the way
anything,
off.
after we go through chapter nine, we're just focusing on 6 and 9 today. So if there's any questions on chapter 6, we'll go through it again afterwards.
Because you're taking away that.
All right. But any questions so far on chapter 6? Just on a general overview of it.
Is the biggest thing out of the bank reconciliation?
Huh?
Is this the biggest part of it? The bank?
Biggest part is the bank reconciliation. So I honestly suggest doing any practice you have of a bank reconciliation from either of your teachers. The only reason I don't create my own bank reconciliations for the most part on the spot is because you have to make it even and it's very hard to work backwards. There will be one on the study guide for Miss Yeager's class I know to practice, but also all the additional practice. Also real quick.
I don't think Yeager needs a joint issues.
She doesn't. It's more for blocker and for, I believe, I don't know for a fact, but I think Mr. Why am I blanking on his name? I know his name, Harvin. Mr. Harvin might also as well. Hello. So you might need to bring in a chair if you want to be in here. We also took over the next room as a Zoom room because they didn't have any of the big rooms today. So
I'm gonna go see what you.
feel free, come join us. So real quick, the Zoom room asks, why is cash credited in number 7? The reason cash was credited is, first off, when we look over to the adjustments, any of the times that we subtracted an amount, we also credited that amount. The biggest reason too is for a non-sufficient funds check, it means that it had bounced. Basically, when they had paid, when the company thought they got paid, they found out they didn't actually got paid because the check bounced.
Are you hearing us in here or like when we're talking or no?
Let me see. I might have accidentally had my mic muted until you mentioned that. So,
Well, we're just getting feedback over here. Like when we're talking, we hear ourselves in it. So I didn't.
really,
I don't wanna, like distract anybody.
no. I'm not getting any feedback at all, and I think that's because I've had this muted.
Oh, okay. You
So-
can leave it like that. I'll keep typing though.
Okay. If anybody, I'm keeping an eye on the chat. So if anybody else joins in from like
Mhm.
outside and starts talking through the mic,
Yeah.
just let me know through the chat.
I will. Yeah.
Awesome.
That makes sense.
Please don't muted right now. Is that what I'm saying?
She's muted, so she can't hear it through.
We officially do have the classroom for Friday. So that's at least confirmed. Any other questions though on chapter 6 with bank reconciliations, with internal controls, or with liquidity of cash? Yes,
What was the 3 main accounts for bank again?
for bank, deposits in transit, outstanding checks, and bank errors. Those are the 3 main. All right, with that, we're going to go on to chapter 9. Current liabilities.
Really short chapter.
So liabilities are kind of, you can kind of put them on a timeline. Because there's 3 elements for a liability. What is the past element for the liability? Why do we have this liability?
Past elements, you said?
Last
Yes.
transaction.
So liabilities can be put on a timeline. Basically, we have the past, the present, and the future. So, if anyone can tell me actually any of them, we're going to focus on the past first. But if anyone has an idea of what the present and the future hold as well, feel free to throw that out there. So, with the past, liabilities occur because of a past transaction. The moment that you make this liability and you record this liability, it's technically in the past because that's when the transaction occurred. It occurred whether a week ago, a month ago, 5 minutes ago. It's occurred in the past transaction because of a past transaction. Now, what do you think is in the present?
Obligation.
Your obligation. Because of the current liability, because it occurred because of a past transaction, we now create a present liability. A present obligation. Until that liability is taken off the books, at the moment, it exists, and we're obligated to it. Anyone have an idea what we do in the future, though? What do we want to do? Huh?
Future payments.
Future payments.
Huh?
Unearned revenue is a liability, but this is kind of like for every liability, no matter what. This is just kind of just the three elements of a liability. So the three elements of a liability is that they occur because of past transaction, they create a present obligation, and we plan to future payment of assets or service. The reasons why we say assets or service is in the case of unearned revenue. Basically, with accounts payable or notes payable and such like that, we have a financial obligation to pay those off. With unearned revenue, we have an obligation to provide a service. So that's why we have assets or service. So, and a little tip, well, see if you guys know it first. What are the two important parts of accounts of that are liabilities that they have in their title? Payable's one of them. We have one more.
Unearned revenue?
Unearned.
Oh, yeah.
So if you ever see payable or unearned, automatically, without thinking, liability. So we're going to start moving on. Current liabilities, a debt that must be paid with either cash or goods and services within 1 year, typically paid using current assets or creating another current liability. So we'll stick towards doing some scenarios and journal entries with liabilities involved. I'm going to throw down 3 journal entries. I'll give you guys maybe like 3 minutes to do them. So as I put them out, just start working on them. All right. I threw up through 3 different current liabilities. Just write the journal entries for them, and then we will run through them. All right. So we'll start with number 1. We bought supplies for $300 on credit. Anyone got me the answer for that?
Supplies 300, accounts payable 300.
Which one is our liability?
Accounts
Yep. All right. My neighbor paid me $100 to mow their lawn next week.
cash 100, unearned revenue.
Cash 100. Unearned revenue. All right. I owe my employees at this time $75, but they will not be paid until next week.
Wage expense, wage payable.
Yep. All right. Any questions on any of this? You all feel good about this? All right. Now let's start getting into the fun new liabilities we learned about. So, sales tax payable. Does anybody know what that is?
It's like the stuff tax you have to pay.
Somewhat, as a company, when do you usually occur sales tax payable?
Whenever you sell something.
Whenever you sell something. Basically, that's why whenever you go buy milk or candy from like the supermarket, is it always the same as the price that they put? That's because they add taxes. It is the money that they give to the government, but yeah, it's very, very specific to whenever they make a sales because they have to pay that sales tax to them. So I'm gonna throw a question down. I'm gonna let you guys. I'll give you guys about 3 minutes to answer it, and we'll run through it. I'll need the journal entry for the sale and the journal entry for when we pay the tax. All right, let's start digging into this. So, before we start jumping into the answer for the journal entry, what is this 400? Right off the bat. Revenue. So, is this debited or credited, and what account is going for that 400? Credit to revenue. All right. What are our other components for this? Awesome. So how much is for cash and how, well, let's focus the sales tax payable. How do we get our sales tax payable?
400 times the tax, the percentage.
Perfect. 400 times the sales tax percentage. What does that equal? 33. All right. So what does that mean for cash? How much is the cash we received? 433. All right. Now, what's going to be that journal entry for paying tax?
Sales tax payable debited.
Sales tax payable debited.
Cash credited.
All right. Now, what is the what is it? Is there any questions on any of this? Like, do we understand how we got here and what account we use? Awesome. If anyone has any questions, do not feel pressure not to speak. I don't know why the words are escaping me for today. And also for the people joining in for the Zoom, we have the computer muted for now, so just type things into the chat and I will be able to look and answer. I'm keeping an eye on that constantly. Let's start moving on. So that was our sales tax. We're gonna start getting into income tax payable. So anyone tell me what income tax payable is?
Income tax on your net income.
Yeah. So basically, it's the federal government. The federal government requires corporations to pay income tax on their net income. So it's essentially what has been taken off and what is owed to the government. Why is this acting the way it is? There we go. Okay. So I'm going to write a scenario on there. Just write me the 2 journal entries for when we accrue this and for when we pay it off. Let's see. All right, I'll give you all 2 minutes on this one, and then we're going to answer it and keep going. All right, let's start going through this. So, what's the journal entry to accrue?
Income tax expense and income tax payment.
For how much? Perfect. All right, so what's gonna be the journal entry to pay?
Income tax payable.
Perfect. All right, any questions on that? Good to hear. Let y'all take your photos.
Sorry.
No, y'all are good.
You heard what okay, I saw it.
Wait, what happened? All right. It's not mentioned too much in detail, but we have short-term notes payable and interest payable and current maturities of long-term debt. So we're gonna look at the short-term note payable and interest first. This is a written promise to pay a debt with interest within 1 year or less. So I'm going to, this is very similar to back when we were accounting for note receivables. I'm gonna see if you guys remember the formula. I'm gonna toss it up on here, give y'all a minute. We're just gonna figure out how do you put the journal entry for when you record and what's the journal entry for when you pay it off. We're gonna start going through this guy. So what's gonna be the journal entry to record this guy?
Okay.
Is it cash 4,000?
Cash 4,000.
Your notes payable 4,000?
Perfect. What about when we pay this guy off? This will be also relevant for chapter 10. So pull back knowledge from when you guys worked on note payables in chapter 10.
Notes payable, interest expense.
Mm-hmm. Both debited?
Yeah. And then cash.
Now, what's gonna be the number for these guys? Because they're not gonna be
1,000 for the notes payable.
4,000 notes payable.
240 for the interest expense, and then 4,240 for cash.
Perfect. Real quick, just checking the map. Yep. Any questions on this? Instead of a year-long, and we're not going to do journal entries. You know where all the journal entries are going now. This was a 60-day note. Does anybody remember how to figure out the interest for a 60-day note? Not split it in half. You're thinking of semi-annual, which I like where your head's going. That's perfect for chapter 10.
Is it 60 over 360?
Perfect. You'll basically, instead of just timesing 4,000 by 6%, you take 4,000, multiply that by 6%, multiply that by 60 over 360. Which,
Yeah.
nope, it's not 365. The reason why is we're using banker days.
Oh,
360, yeah. 360 is banker days. Since the year fluctuates so much, they use just 360 for 30 days for each month. That's the only reason they don't use 365.
I could have answered that. Come on.
So instead of 240, we know we have $40 of interest.
Where?
Yes, to get the income, so Zooms on the chat says, how do we get interest expense? 4,000 times 6% equals 140. Have a good one. Thanks for joining. Yeah, of course. Thanks y'all for putting up with being sardines. So Does that help answer the question? Or is there more questions towards how to get here? Awesome. Got it here. So current liability, just be in mind, is current maturities of long-term debt. I don't believe you guys would need to know how to calculate those, but the biggest thing to know is that if we are to pay for like a note payable, we know from chapter 10, we have note payables that extend all the way to 10 years, but we pay that off every year. The portion you pay off that year is going to be your current liability. So whenever you're doing those amortization charts, whatever number you're on for that cash payment, for that interest expense, and for the principal amount, that's technically called a current liability because you're supposed to pay that within a year. Now, overall, though, the whole note payable is a long-term liability. So I don't just know the terminology and understand that. Otherwise, you don't need to know how to actually calculate that. Unless you're an accounting major, which then you'll get to learn how to do that in intermediate. So the last section, which is like 3 pages, it's the biggest portion of chapter 9, is payroll liabilities, where we get to learn about the liabilities from salaries and wages, employee benefits, and payroll taxes required by the employer. So what includes is the payroll and the deductions. Can anyone tell me what the gross pay is?
Like a random?
Huh?
Total amount of everything.
Total amount of everything, basically whatever the person earned. It's basically anything before deductions, before taxes and deductions. Salary and wages, they're both the same, but what's the one thing that makes salaries and wages different?
The wages are paid by the hour.
Wages are paid by the hour. And what was salaries?
Monthly or annual.
Yep, monthly or annually. So, a commission. What is a commission?
Percentage of
Usually an additional earning, that's usually a percentage.
Yep, percentage of sale amount. And overtime pay.
Some people get paid more than work more than you're supposed to.
Yep, exactly. And net pay. What's the net pay?
Yeah, for deductions.
Yep, your pay after the deductions. Gross pay minus all deductions and taxes.
I'm gonna roll out.
So, you mostly need to know about the terminology, but the big thing to know how to calculate is going to be the gross profit and then figuring out how to take out all the deductions. So we're going to move on first towards figuring out gross pay, and then I'll just start adding on deductions and we'll start talking about them. For Miss Yeager's class, you don't need to know the journal entries for payroll, but I know for Miss Blockers and I believe Mr. Harving's, you need to know the journal entries. You guys start working through this. I'll give you guys about, I think, 3 minutes. We're gonna start running through this.
7 or 17.
17.
Oh, I did that 7. I did 2.
Sorry, that is my fault. Let me make this a little more. All right, with that, I'm gonna give you guys like another minute before we start running through and working through this. Yes.
No, I'm sorry, I was stretching.
Oh, okay.
Do we need journal entries for this?
We will be doing journal entries, not for this exactly, but once we start working out the whole salaries expense and salaries payable, that's when we'll start going through that. And that's especially needed for Ms. Blocker and Mr. Harvin. All right. I think we're gonna start running through this now. So, how do we start this off? What do we first need to figure out?
Wait, do you do how much you get paid weekly? Or
This is just overall for right now. We're not going to worry about like weekly. This is basically us as an employer saying, all right, this week, this man worked this many hours. This is kind of the policy for his pay. And we just need to figure out, okay, how much do we owe him? So. the first thing we want to do is figure out, all right, how much of this is overtime and how much of this is normal pay? So how much of this is normal pay?
40 hours.
40. How much of this is overtime?
17.
So what do we times the 40 by? 17. I didn't realize how much I like 17 in this problem till now. So how much do we times the 17 by?
1.5.
1.5 and 17. So calculating this,
680.
Yes, sir.
40 times.
That time and a half.
yep, 680, I know. All right. 15. Yep, 433. So equal. All right. Does everyone understand how we got here?
Yep.
Awesome. So we at least know his pay. Now we're going to start working on what his expenses and deductions are. So I'm going to start getting his list of IOUs up. All right.
Social Security part, we do, the total times 0.062.
Yep.
I have a question.
Yes.
Whenever you're doing the percentage-based ones, what do you multiply by those percentages?
So you multiply the total amount.
Even after other deductions?
Yes, you basically always just take the total amount. We're worried about basically what the government wants is, you have $1,000 in there. Well, I'm gonna take, I think it's like 1,000 times 6.2.
Are we allowed to round?
Yeah, you can round up to the nearest second decimal. Basically, they want to take a piece of this pie, 6.2% of this pie. Bring this up here. So what do we start off with just figuring out the net pay? We're not doing the journal entries yet. We're just doing the net pay. What's the first number we start off with? 1,103.5. We're gonna add a 0 because we're working in monetary units. So what's the first thing we have to deduct?
Federal withholding.
Federal withholding, 193.50. Now, what else do we have to do?
Multiply on the 1,000, that's 50 times 0.062.
Mm-hmm. All right, and that would be $69.04. All right. So, what's next?
Insurance.
Yeah, the Medicare.
Oh, whoops. Oh, yeah.
Yep, Medicare first, but then insurance.
Yeah.
We're going through it.
1,100 times 0.01.
Mm-hmm. That's gonna be 16.15. Any questions so far? All right, awesome. Next is insurance. So we're gonna take out that insurance. We'll put health for $30. And then what's the last one?
Volunteer.
Mm-hmm. altogether, that should get us to a grand total of $794.81. Anyone get anything different? Nope. All right. So next is the journal entry, and this is where even if you're in like Miss Blocker's or Miss Harvin class, Mr. Harvin's class, doing it this way also becomes very useful because this is your structure. So first things first, gross pay. What do we technically use that for in our journal entry? Is that a debit, a credit?
Credit.
It's actually going to be a debit because this, if you notice, everything else takes out of here. That's why this is going to be your anchor. Have a good one. Thanks for joining.
Thanks, you too.
So what account technically would gross pay also be called?
Salary expense.
Salary expense. So I'm going to put this in a new color. So this is our anchor account. No other debit will be here. And that's kind of how it goes for these payroll entries. You'll have one debit and everything else is credited. So
Would it be wage expense because he's hourly?
wage expense, salary expense, they both go hand in hand. When you go into like the test or anything, either one really works. So if your heart says wage, in the real world, it's a lot more strict. But in this one, we know what we're dealing with. We're gonna pay someone. So now let's work on this. The federal, what's that gonna be called?
Income tax payable.
Income tax payable. All right. FICA Social Security. What do you say?
FICA SSP.
FICA excess payable. FICA Medicaid.
What do you say?
FICA Medicaid or care.
FICA Medicare pay.
Yep.
Still pay as long as.
The silly thing is, that's genuinely what it is for this.
So everything's payable.
Everything down here is a payable.
So you put health insurance too.
Health insurance payable.
So everything just turns into its own account.
Yep. Because this is all going to different entities. Like income tax payable, technically income and FICA and all that all go to one entity, but they all want it separated. If you, for accounting majors, if you ever want to go into tax, you're going to find out whenever you do like a 940 or 941, even though you're paying them the income tax, they want it specifically set in separate boxes. So having that separated as a company is great. Everything else is also just going to other places. So you want to make sure you keep that to the side. Like, okay, I'm going to pay them later. And yeah, then we have United Way payable.
This is a journal entry, right?
This is a journal entry.
It's just one big journal entry?
It is one big journal entry. All right. Does this balance?
No,
No.
this is 0.
Yep. So we're, oh,
It does.
I haven't, it does not. So the last bit is this net pay. This is basically what we're missing over here. What technically is that net pay going to be called?
Salary payable.
Salary payable, that's gonna, what we're gonna hopefully pay our employee,
Or we can do wages payable.
or you can do wages payable, as long as you tie it back. As long as both of these are the same, if you use salary expense, use salary payable. If you use wage expense, use wage payable.
So why couldn't you use this? Like, just cause, like, why couldn't you, like, so say for the top one, you use wages expense, but for the bottom, you use salary payable, why couldn't you do that?
Because technically you want to tie them together.
Mhm.
You want to make sure they both have that same beginning title because you do want to tie it together. Especially, it's good to use when you go into companies where they do have more stricter regulations. We use either or now because you guys are in a principal class. And so as long as you know you're paying someone and it's got salary expense, salary payable, or wage expense, wage payable, we're good to go. We call it even. But when we go into like intermediate, or when you go into like the real world accounting, they're going to want very specific ones, and getting into the practice of just tying those two together is important.
That makes sense.
Now, there is one more journal entry to keep into track, and that's going to be the payroll. So we're going to try to make this as small as we can. So just off of a guess, what are we going to be calling the debit for this? Because again, there's one debit and then a bunch of credits. So for payroll tax, what do you think is going to be that debit?
So this payroll.
Expense.
Payroll tax expense.
Payroll tax expense.
Do we have to know that?
I think you guys just, huh?
I mean, if you Jaeger, no, I don't think Jaeger.
Yeah, I don't think, you don't need to know the journal entry, but you need to know what it is. So we don't know the number for payroll tax yet because we need to figure out the rest of them. So one thing that is shared, there's two things that are shared between salary and payroll. What are the two things out of a wild guess?
Cash?
The two fighters.
Two FICAs. Not cash. We're not dealing with cash. There's no cash here.
I don't know.
Hey, it's a guess.
Wait, is it different journal entry or same journal entry?
Separate journal entry.
Wait, just making sure. So this is just gonna be FICA,
Mhm.
FICA SS, I'm trying to remember.
There's more to it, but these, but from the,
Oh, no, I'm talking about the new one.
huh?
I'm talking about just from the
What's
entry.
FICA and what's the difference between FICA and FUTA?
Okay, it's FICA SS.
And a SUDA?
FICA is, let's see, Federal Insurance Contribution Act. That's what FICA is. And FUTA is, well, there's FUTA and SUDA, which federal unemployment tax and state unemployment tax.
Oh,
So, Tax Act, the A's Act. So these two are shared for the biggest reason. Why is because technically this is a reason why some people choose to go into companies and starting their own business. When you're self-employed, you technically take 12.4% of your total income to give to the government. When you are a W-2 employee, you take half of that responsibility while the employer takes the other half. So that's the reason why it's split and why we use both of those. You don't need to know that for the test, but that's just a fun fact of the real world. So payroll does have to deal with FUTA and SUTA, and you'll be given those percentiles as well, I believe. So we're just gonna make some wild guesses here. We're just gonna say like $60 for each. And what do you got to do with payroll tax expense at that point? Add everything up. Yep. As long as you know that you need these four for payroll though.
you just make up 60?
I just made up 60.
Oh.
I might go into because I know Miss Blocker doesn't, I mean, not Miss Blocker, I know Miss Yeager doesn't have the percentiles on hers. That's why I don't know them right off the bat, but I'm gonna real quick look at Miss Blocker's to add that all together. and see if she has them stated, because if she does, I'm going to actually use those instead. Let's see. Or does anyone have Miss Blocker's notes that I could look at real quick? Awesome. Let me see if. Yeah, so, all right. So real quick, we're gonna bring this back a little, because there is something very important to note. Because I don't know if he's gonna have you guys memorize it or not. So just in case, so we have them on the board. Huda is 0.6%, while state unemployment is 5.4%. And there is like a ceiling and a floor for each of them. Pass that back over. I believe it's like the employee's first 7,000 for the year total is taxed by these amounts. So real quick, going back to the math. We'll take, and you times it by again this gross pay. 1113.5 times 0.06. We know.
Wait, you said Buddha is 6%,
0.6%.
so we didn't have to move the decimal like two times to the left.
Yep.
Before you want to.
Yeah, so you'd have 0, 0, then 6. So you'd have like, and we're just gonna round this up to 6.68.
Hey, I gotta do it.
Yep.
No, you want to question?
I forgot we did that. In that thing. Yeah, that's so. It's 5.4%.
5.4%. Sorry, this thing is.
Did you multiply those with the gross pay?
Yep, you multiply those by the gross pay.
Let's say that's 60.13.
60.13.
I'm still have to say I do need to know this because the future.
Yep, as an accounting major, you will need to know this.
Wait, yeah, actually kind of does.
So real quick, JB says, how did we get all of the numbers to get to our net pay? So how we got there, and I'm just gonna take this chance to highlight every little bit of this, and we're just gonna focus in to these two. Have a good one. Thank you for joining. So I'm gonna take a highlighter to all of these. So first things first is we know that our gross pay is what we've calculated. Federal, we find through our federal income tax withholdings. I'm just gonna highlight. Our Social Security is found out by taking 6.2%. Oop, went too far. 6.2% of his earnings. So you take 6.2% and times that by 1,113.50. You then find Medicare. Oh, Medicare through the same way of taking 1.45, and I'll make little equations to the side of this to show as well. Actually, that's a terrible idea. Green on green highlighter. And for the last two, you'll take like the insurance. insurance rate, and the United Way fee. So look at this first. 1113.50 times 0.06. Whoop. 2. That's how we get 69.04. And same thing here. 1113.50 times 0.0145. Does that answer your question? Yep, well, you don't add them all up, you technically subtract, like all of these here is subtracted from this gross pay, and that's how we end up getting this number down here. Awesome. Any other questions? Anything through chapter 6 or chapter 9?
Ooh, I could do it, civil practice in chapter 6.
Hey, you guys want to work on another bank reconciliation?
Yeah.
Yes. Please.
Or is there anything else, like anything within bank?
This is bank reconciliations, I can't remember when, like, I'm doing this.
Always ask yourself, who knows? Real quick, I'm gonna look back here because I know I have some terminology between employee that we kind of skipped over just to go into the problem. So I'm gonna wrap up chapter 9 real quick. Employee payroll withholding deductions. The difference between gross and net pay is the amount of payroll withholding deductions. So we got FICA, which was Federal Insurance Contribution Act, where you take 6.2% of technically the first 160,200 employees' earnings. You only just need to know how to figure out how much it is, which is 0.062% of your total. Same with Medicare, which there's no maximum tax, 1.45% of the earnings. Income tax, which is employee federal and state income, which is always dependent on how much they choose to take out, because at the end of the year, if they took out too much, they get a refund. If they take out too little, the employee owes money. So whenever you get a job, that's kind of how it goes. I am going to post this on YouTube. So this one's going to be edited. Usually exam studies I post up right away, but because we had that issue for like 30 minutes, I'm going to edit this up. So this will probably be posted up rather Thursday or Friday after I finish cutting it to pieces. Depending on number of allowance employees files on W4, optional deductions are also withheld and reported as current liabilities until paid to appropriate third parties, aka health insurance or United Way. These are optional deductions, basically whatever the employee opts into. And without further ado, we are going to move on.
Overdraft fee.
Basically, when you take too much money out of your bank account, the bank basically charges you for it.
Oh.
Fun fact about owning a bank account. So this should add up. We will work through it together because there is also very likely that it does not add up, because these are very difficult to make on the spot. But I wanted to give you guys something fresh.
So it's coin flip.
Huh?
It's a coin flip before that these add up.
And if they do, then that's going to be great. If not, either way, we're going to go through the categorization. And that's the important thing, because on your tests, they will add up no matter what.
Is that $11 on 5
Yes.
bands?
That is $11.
What's that one thing for a book? It's like it's electronic or something.
Which one?
For a book.
Yeah, electronics fund transfer.
Yep.
There we go. Does that look more like 11? Or does that look worse?
It's better.
Okay. I just want to make sure. It's hard to have good handwriting on this thing.
I gotta try that for the-
All right. Y'all ready? Let's go through this. Like I said, if these don't add up, then you can completely blame me. The important thing is we at least know where everything's going. So one of the big things to do whenever you're going through this is always ask, does the book know or the bank know? So how much should we put for bank?
10,000.
10,000. How much for book?
10,000.
All right. Just gonna check mark these off. All right, deposits in transit. Where does that go? Bank. The reason why, we know that we put those in. We know that we deposited this amount. We're just waiting for the bank to know that we deposited this amount. And do we add or subtract that on? Add. The bank took an overdraft fee of $35. So
EFT, $35.
EFT is $35 or service charge $35. Either one works. Do we add or subtract this in?
Subtract.
Subtract. So we wrote a check for $311 and it was posted in the ledger for $11. So is this the bank or the book? Book error. Book errors, always make sure you do a T-chart. So how much did we post it in the ledger for?
11.
11. How much should it have been?
300.
311. So the big thing is you find the difference. So we know we have to take out 300 more. So are we adding or subtracting that in?
Subtract.
Subtract it because we're crediting our cash balance. So we're just going to put this as like book error. All right. Checks written for 400 were sent last night. So is that a bank error or a book error?
Huh?
Checks written for 400 were sent last night.
Checks for.
Just checks. We wrote out a check and we sent it out last night.
I didn't think it was an error, just an outstanding check.
It is an outstanding check. So whose correction is that? The bank. We know we wrote that check and it's for the correct amount. Now is it adding to bank or subtracting?
Subtracting.
All right. Non-sufficient funds of 65 were returned.
That's not 65.
$65. So non-sufficient funds, who usually knows about them? The bank. Because non-sufficient funds are when a check bounces. So basically the bank said, we can't take that. You can't get this money. They have no money to give. And we only find out when we look at the bank reconciliation forms or the bank statement. So we know that it's a book error. Now, are we adding or subtracting? We're subtracting. Any questions so far? All right, note collected by bank was 4,400. Now who gets this? The book. We add or subtract? All right. And last but not least, a check written by the bread company was debited out of the bear company of $100. So, bank error. Nobody knows what happened to this. Basically, the bank took out money without us technically taking money out. So, is that adding or subtracting to the balance? Let's
We take it out, so then we add it back.
We do add it back. I realize I have messed up, but that's fine. We're gonna say those outstanding checks were 600. We're gonna all pretend here that was 600.
I don't understand bank collections and why is that to the book end?
So bank collections is basically where the bank collected money for you. Let's say you had a note receivable, someone owed you money, and you said, all right, here's my bank information. When you are ready to pay it over. So technically the bank collected it for you and you don't know about it till you look at the bank, till you look at the bank statement, you're like, oh, that came in. It's kind of like when, have you ever, oh no, you're good, you're good. We're not done yet though either. So once, yeah. Fix this one real quick. And then we're gonna talk more in detail about the bank collections. So while you guys are calculating the new totals, because now they should even out. Yeah, essentially it is just the bank collecting on your behalf. Where, have you ever paid for something online, like Amazon? Do you think that Amazon knows on a constant basis? They're probably looking at their bank records, or they're looking at their, well, I guess technically this would be put into the system, but that was like the best reason, that was the thing that came to mind.
Oh, at that, it's just the entry for bank collection doesn't specify why they're collecting it.
Yeah, no, it's just, they just collect it. They collected it on our behalf. That's the best way I can put it. You'll typically see it as a note collected by bank, or
So the side where it says where's the book, the bank knows about that, but on the side with the, like with the bank, we know about that.
yes. The only one that neither knows about are the bank errors, because we only find out about it when we look at the bank statement, and then we tell the bank, hey, you messed up, you need to fix it. And then both of them know. But that's why I say with the bank error, nobody knows until you look at it. And that's why it's the bank's fault. Let's see, I'm trying to see, because so far it just looks like every time it's the note received. So yeah, essentially, note received by bank collections. All right, anyone have the grand total number for lending?
13,000.
13,500. Once again, too, we changed the outstanding check value from 400 to 600. Because like I said, making these things is very hard. So we managed to make it even out now.
So the bank, whenever you get the initial bank and book balances, that's just what the starting amount is in there?
Yep.
Okay, got it.
But all right. Any other questions on this guy? Awesome. Well, this was all that we've done today.
It's a lot of
You can see in what way that I've done this.